Welcome viewers. In this video, we will do a quick market update and look at the action over the last few days. Quick note to the disclaimer, please pause and read through this. Essentially, this channel is not providing financial advice. All trading carries risks, and always seek out professional advice if you need to for your investment decisions. In this video, we will focus on kind of the trader slash markets area. Okay, so let's take a long view of the broad markets. So from the 2009 lows, clearly we can see what the bull market did. And now we come to the lows of that channel, kind of tested the June lows, and we kind of still in that area, even though we had a bounce for a couple of days on a weekly chart. We can see that it's trying to find support, but the areas that we need to look at are below that, because if this market is going to continue its downtrend, then it's only 3,600 and below are the areas of interest. And then these two thick bars are what we're looking for in terms of potential turning zones. Worst case scenario takes this all the way down to 22. That's certainly not impossible, but that's a long way off, and a lot of damage would have to occur before we get to that level. So let's zoom in a little bit further. Okay, so here's the same chart zoomed in, and now we're on the daily as opposed to the weekly. So we can see that retest of the June low is a little bit clearer, and true to form, we came down, we did undercut the June low slightly, and then from there we've had two solid days in terms of a bounce, but now we're facing a lot of resistance up here. So it's a question of whether which zone this could fail, and then we'll be back down, traveling back down again. So certainly 3,600 remains an area we want to watch. And then if we zoom in further on kind of the last 5 days and 25 days worth of action. So over a 25-day period, going back 25 days, we've had 11 selling days, and over the last 5 days, there's been 2 selling days. We've also had 2 strong up days, and over the last 25 days action, there's actually been 4 strong up days. And then overall, in terms of up and down days, we have a up-down ratio of 4 to 11. That means 4 days were up and 11 days were down. And so strong net selling bias continues. And here we can see a little finer granularity. June lows get undercut, and then we bounce off. Now we've got trend channel resistance, we've got moving average resistance, and we've got more trend channel resistance up here from this falling wedge pattern. So then we've had 2 days. There's potentially another day or 2 before the picture clarifies itself. So on this gap up day, there was higher volume today, and that was good. The prior day's bounce was strong, but then finished a little bit off the highs. Volume wasn't as large as the prior day to that, so we didn't get the heavier volume, but it was certainly did turn up today. And so the look of the market kind of suggests that short-term technical bounce is in play, likely to be met with a resistance in this zone here, and then we'll see what the market's got in terms of whether it's got more impetus to the upside, or if it resumes and starts to track back down again. Having said that, there is a lot of support in this zone as well, so I wouldn't be surprised if we could also have a third scenario, which is we try to find a trading range for several days ahead. So that's also on the table as well. So I think caution is warranted. Markets continue and remain in their downtrends with the occasional short, sharp rallies in play. So that seems to be the nature of the markets at the moment. And in terms of upcoming earnings watch this week, a couple of stocks in the S&P, ConAgra, ticker CAG, and Constellation Brands, ticker STZ, are both set to report this week. And then just a reminder about the disclaimer again. So that wraps up this video. Hope you found it useful, and I will see you in the next video. Thank you for watching. Bye-bye.